Yeah. So look, I think the bad news is, and the painful part for investors is obviously the huge surge in yields and negative returns, as you mentioned, the worst start for fixed income, for many fixed income markets, and particularly for munis. And because munis are primarily owned by individuals, when you do see a significant upward move in yields, you do see panic and you see kind of forced selling where munis have underperformed, let's say, other asset classes, even when rates start to stabilize. So what that creates is an incredible opportunity for investors to now invest at high tax-free yields, right? So in the short end of the curve, incredible amount of tax-free yield that clients are able to capture, as well in the long end. And this is something that we haven't seen since kind of 2009 and 2010. So the good news is that so far this month, the broad kind of Bloomberg Muni Index is showing posting positive returns of almost 2%.
Yeah.
And again, that's telling of some of those outflows certainly abating and more interest kind of coming in as investors are seeing value here.
I mean, and it is weird to have the muni bonds kind of trading at in parity or in line with Treasury bonds, right? Because you'd think, okay, well, if they're both going to offer the same yield, I'll take the one with the better tax advantages. So it seemed like that moment told us that, okay, maybe now this asset class has gotten too cheap. I don't know.
Yes, and that's exactly right. And the main thing here also to point out, unlike possibly other sell-off periods, you could not have a stronger credit story, right, from a fundamental standpoint. So this was not by any means credit related, purely had to do with kind of the significant rate move that fixed income markets have seen. So credit fundamentals still look extremely strong, and we would even say stronger than municipalities went into kind of the 2008 timeframe. So if we do see weaker growth, if we do kind of see a recessionary downturn here, we think credit fundamentals are very strong. And so today, valuations, again, in the 10 to 20-year part of the curve, I think are optimal. And again, because rising rates were a worry for quite some time, investors typically and retail investors have shied away from the longer end. So when you take a look at valuations today, on a tax equivalent yield basis, investors can lock in north of 6%
Wow.
in the 15 to 20-year part of the curve. So certainly, a great opportunity, we think, to leg in here in this market.
Yeah, and so we look at, like you said, the fundamentals being strong. Obviously, a lot of states are dealing with excess stimulus funds and things like that right now. But what about if we're heading into a bigger economic slowdown?
Yeah, so I think when you look at particularly in investment grade munis and high yield munis as well, obviously you're going to see kind of that repercussion of a slowdown, a weaker growth period first start to show there. But even in the high yield space, given that today's kind of baseline of defaults is still very low, again, credit fundamentals still even in the high yield space are fairly strong. We don't see the default rate ticking up significantly. And for, again, municipal credits, and especially across states and cities, almost $2 trillion of aid have gone out to municipalities, right, over the past 2 years as part of federal stimulus kind of plans. So, state revenues have come in far higher than expected. Many cities and states are sitting on surpluses. So, again, I think they're much better positioned today than they have before. Now, that's not to say, credit monitoring isn't going to be important. I think
Right.
professional management, in municipal bond portfolios is going to be very important. And one last thing to add, our clients, you had asked earlier, what are they taking advantage of? At Parametric in our municipal portfolios, we are tax loss harvesting, right? So kind of making lemonade
Sure.
out of lemons, if you will. And that's been an incredible opportunity that, we're able to do throughout the year. And we're not waiting just for the end of the year to kind of take those losses.
No, that's a great point. Nisha, thank you. Appreciate the update.
Thank you.
Nisha Patel with Parametric.